is it's not gold rising, it's the dollar and currencies falling. That's the whole thing. It's credit going down. So the idea that this is a gold bull market is actually a misnomer. It's a bear market for fiat currencies. China and Russia effectively are using the Shanghai Cooperation Organization and BRICS, if you like, an alternative to the West. And so what she's looking to do is to build her own markets, which are not dollar-centric. The de-dollarization issue, assuming that events don't intervene, which I believe they will, but let's assume for a moment events are not going to intervene. This is a 30, 40-year project. This is not going to be an overnight deal.
De-dollarization has increasingly become a significant topic of discussion, particularly highlighted by the recent BRICS summit in Kazan. According to Alasdair Macleod, head of research at Gold Money, the implications of this summit extend beyond merely the challenges faced by the US dollar. They point to a potential transformation of the entire Western-dominated economic order. With the addition of new member countries, Egypt, Ethiopia, Iran, and the United Arab Emirates, BRICS now accounts for over 33% of global GDP, surpassing the G7's 29%. This expansion illustrates not only the growing economic clout of the bloc, but also its potential to reshape global economic dynamics. The member nations of BRICS have rapidly increased their gold reserves, now holding over 20% of the world's total supply. This trend gains further significance in light of recent geopolitical events, particularly Russia's invasion of Ukraine, which resulted in substantial freezes on Russian foreign exchange reserves by Western nations. In response, the potential establishment of a BRICS-controlled precious metals exchange could serve as a formidable alternative to the existing financial system, positioning gold as a viable medium of exchange that challenges the dominance of the US dollar. While some analysts dismiss the idea of de-dollarization as unrealistic, data indicates a notable decline in the dollar's share of global reserves, from around 71% at the start of the millennium to approximately 58% today. In contrast, gold's share is rising, signaling a possible shift in global monetary dynamics. Central banks expect this trend to continue, forecasting a further decline in the dollar's share and an increase in gold's share over the next 5 years. If BRICS can successfully develop a robust alternative financial framework, it could diminish reliance on established institutions like the IMF and World Bank. As these developments unfold, geopolitical tensions are likely to rise, with Western nations viewing the strengthening of BRICS as a direct threat to their economic interests. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this.
You need to have unanimity within BRICS to get something on the agenda. So that wasn't going to happen. The other thing which was really foreshadowed from the previous summit in Johannesburg was the creation of a new class, if you like, of BRICS member. Not direct membership because it becomes too unwieldy, if you like, but more have an interim phase, like a partner. They call it a partner. I would have thought an associate was a better word in English, but anyway, they have called it a partner. Now, I saw a list of these potential partners leaked, but I haven't seen anything since. If that list is right, then it's actually quite major. We see countries like Indonesia, we've got Thailand, we've got Malaysia, we've got Vietnam, which basically China ties up the Chinese diaspora, with a few exceptions like the Philippines, in Southeast Asia. And they're very populous as well. And on top of that, you have got Nigeria, a very populous country with significant GDP, and also Turkey, which is an interesting one because there is no doubt that Turkey is drifting away. Having been refused entry into the EU, she's drifting away from the Western Alliance, even though she's still a member of NATO, and sees her future more, if you like, as the leading light in the Turkish nations throughout Central Asia. I mean, that goes all the way towards Mongolia. So you could see that from Turkey's point of view, she's playing a strategic game. But again, no one in this wants to upset the Americans unduly. They're getting a little bit of safety in numbers, But the problem with upsetting the Americans is that some of these guys owe money to Americans, and if they don't, they've got dollars. This is perhaps one of the reasons why Saudi Arabia hasn't activated her BRICS membership. And the other thing is, of course, the Americans are not beyond organizing regime change with someone they don't like. So on that basis, you find that, there's a lot of caution in this. The other thing which is confirmed, and this shouldn't surprise us, is that China and Russia effectively are using the Shanghai Cooperation Organization and BRICS, if you like, an alternative to the West. And so what she's looking to do is to build her own markets, which are not dollar-centric. Like grains. They also mentioned a precious metals market, for gold, silver, also diamond market. Other metal markets going to follow and all the rest of it. They're replicating the financial system with their own version of the IMF in the New Development Bank and so on and so on and so on. So they are setting up a complete parallel organization, but this is going to take time. I mean, the de-dollarization issue, assuming that events don't intervene, which I believe they will, but let's assume for a moment events are not going to intervene. This is a 30, 40-year project. So, this is not going to be an overnight deal. Anyway, that's the background to BRICS.
The concept of a gold-backed currency is gaining traction among various nations, as it offers a tangible asset that could provide greater stability compared to fiat currencies, which are increasingly vulnerable to inflation and shifting government policies. By linking currency value to gold, these countries aim to instill confidence among investors and consumers, potentially reducing the risks associated with reliance on a single dominant currency. However, Alasdair highlights that transitioning to such a system presents significant challenges. For a new currency to succeed, it must effectively compete with existing currencies and integrate smoothly into current credit systems central to modern financial transactions. Historical trends suggest that established financial systems often resist change, and existing institutions are likely to push back against new alternatives. The long-term implications could be substantial if these challenges can be navigated successfully. Alasdair notes that we may witness a shift toward a multipolar currency landscape, where multiple currencies coexist, each with varying degrees of acceptance and influence. This transformation could increase volatility in financial markets and significantly affect global trade dynamics and international relationships among nations.
The unit never was on the table. I mean, I looked at it and it was so full of faults, it just wouldn't work. It was quite clear that the authors didn't understand credit. There was absolutely no mention of what interest rate, credit based on the unit would bear. I mean, it's fundamental, and they missed that entirely.
No.
Is quite simply something that is owed, if you like, because the other side of it is an obligation to pay. And everything is credit. If you look at a bank balance sheet, you've got deposits on one side and you've got liabilities on the other side. So, liabilities to deposit holders on the other side. As far as the bank is concerned, deposit holders are a liability, which they have got to discharge. So your deposit is basically, it's not money that you own. It is an obligation of your bank to pay you. The definition of credit basically is you have credit on one side and you have an obligation on the other side. Always. It is not final settlement. Final settlement is the discharge of a debt, absolutely. And that can only be done with real money, which is gold or silver, depending on what standard you operate on. But going back to the situation with the unit, the problem there is that the authors of this did not understand the way in which money and credit actually works. In a functioning economy, you do not use money at all. Very exceptionally, you might just use money. But I mean, that's as exceptional as using Bitcoin. It doesn't happen. It is always using credit. What happens is that the banks create the credit on the back of, let's say, a gold standard. The credit is guaranteed. The value of the credit is guaranteed by its link to the gold standard, with an additional risk factor for the possibility that the the debtor, which in this case is the bank, might not discharge its obligations. So everything is credit. So, these guys who put together the unit, there's no mention of credit. How do they think this works? I mean, this is rather like the idiots in Bitcoin. I mean, they just don't understand how an economy functions and the role of money and credit. Money almost never, credit entirely. The other thing I looked at is I thought I better see who these clowns were who put together this unit thing. And it transpired there are a couple of investment managers. One was a Russian, another was a Chinaman. And you sort of think, well, there's a Russian name, there's a Chinese name, and you think this is put together on, by a committee, if you like, of Russians and Chinese, of the Russian and Chinese joint governments. I mean, it wasn't. It's just a couple of fund managers speculating. And they didn't know what they're talking about. But, they got all these hairs running, got everybody terribly excited. But, you just had to look a little more deeply to see that the whole thing was actually a farce. So, forget this unit thing.
As nations increasingly secure their dollar assets with gold, the metal's role as a benchmark and hedge becomes more significant. This shift from dollar-denominated pricing prompts substantial dollar outflows into gold, establishing it as a crucial asset for central banks and commodity trading advisors. With BRICS nations dominating 85% of global commodities trade, this multipolar alliance is well positioned to set new standards for gold as a financial asset. Liquidity assessments suggest that gold prices could rise to as high as $3,000, driven by ongoing demand and geopolitical pressures. Please share your thoughts on Alasdair's analysis in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.